The Beach FM Business Lunch Show, brought to you by PlaceMakers Kapiti Horowhenua. Together we're building New Zealand.
Welcome back to Business Lunch on Beach FM with Damian, and let's talk financial. Let's talk mortgages. Let's talk insurance. Let's talk to Craig Pope from Pope & Co. Mortgages. G'day, Craig.
G'day, how's it going?
I'm very well. How are you holding up during this time?
Yeah, getting there. It's been a good time to learn, new technology and be flexible and adapt. But whilst it's frustrating, I quite enjoy working from home, back to the good old days. But I think the key thing is it's been an opportunity for everyone to learn new technology.
Absolutely, mate. Absolutely. Well, you do have a bit of background. You're 20 years in the field. You've seen it change over that 20 years, I'm sure.
Yeah, it's I guess in our industry and a lot of others, it's you kind of got to expect the unexpected, and there's always change happening. So you've got to be adaptable, and I guess what's happening at the moment is it's a very extreme case of it, I guess, but everyone's got to adapt and things change, and I guess it's you don't always know. It's things like the GFC and the recession we're on at the moment. You don't always know what's coming. You don't know the magnitude of it, but you do know that it's cyclical. Every 10 years or so, something does happen. This is just a real extreme one. I've heard it called like a 1 in 100 year sort of, event. And I guess, nothing can overly prepare you for it. But if you know that something can happen, then at least you've always got to have some sort of preparation for it.
Absolutely. Luckily for now, and as opposed to 100 years ago, we've got the internet. How was confidence and how was business out there before COVID-19?
Well, I think it was confident, and like I say, I think there was optimism, and I think it was a fairly good time for a lot of businesses with tourism and property market increasing and whatnot. So I think this has been a real jolt. It hasn't been a gradual thing. It's been a real jolt for a lot of businesses. And I think that's one of the key differences to in the past, where this has been fairly sudden, and it's been a pretty major change for a lot of businesses and obviously people, of course. And I think that's the hard thing, because it has been so sudden and so dramatic. For businesses where their turnover kind of, turns off overnight, that's quite significant, because your expenses still have to be paid. But overnight, you've got a really significant change.
Yeah, absolutely. With the change, obviously a lot of news in the media with the government rolling out money for packages. How does this? What are some of the biggest changes that people should be looking at and thinking of?
Well, I guess the first thing challenges for businesses to really get their head around just what it is that that is out there in terms of, obviously, the wage subsidy is a big one. Just take your time and really look and see what's available from a government perspective and help in that respect. Obviously, just keep in the back of your mind that at some point in time, the government's going to, like the wage subsidy, you are going to have to dot a few I's and cross a few T's down the track. The government's really good at paying that out very quickly with minimal questions asked. But just bear in mind that there will come a time when they'll look back on it, and you've got to, provide information to make sure that you don't have to pay any back. But a lot of businesses have been adapting and reinventing themselves, and obviously there's help from the government. I think one of the hardest things is, that can only do so much. The government can't can't always help with a lot of expenses that businesses have. So that'll be and again, some businesses will be able to tread water for a while and hang in there, especially when we drop down to level 3. Others won't be so lucky.
Yeah, I bet. Well, let's talk mortgages now. We've seen a drop in the minimal deposit that you have. We've also seen a drop in interest rates. Should people still be confident about putting their money in real estate, property?
That's a really good question. So with the LVR restrictions, certainly, in theory, that and it looks highly likely the Reserve Bank will remove those restrictions. Now, what that basically means is the banks can do more lending to low deposit borrowers. And in theory, investors don't need as big a deposit as they need before. However, at a time like this, the banks do tend to be more cautious on their lending. So even though the Reserve Bank says, right, you can do as much low deposit lending as you want, banks will, and I've already seen it, are getting stricter on everything. And so even though technically they can lend more to low deposit borrowers, they will be more cautious of who they lend to. So in some ways it's good, in other ways it will be, the banks will be more cautious because they're going to be reluctant to give lots of 90% home loans out if it's looking likely that the property market could drop, 10 or 15%, like, some commentators have said. So even though the Reserve Bank says, yep, you can do it and there's no cap on it, a bank's going to go, I don't really want to give somebody a 90% loan if the property market's then going to drop by 10%. So it'll be interesting to see just how that sort of plays out. Definitely, now in inverted commas is always a good time to be buying real estate, but obviously you've got to be careful. You've got to, and the banks are looking at people's job stability. They're checking to make sure that they're still getting paid what they'd normally get paid. So if you are in a job or an industry where you're at risk, then you're not going to take that risk and try and buy a house if your income's not secure. A lot of people are in industries where their income's secure, so definitely still a good time to be buying. But of course, you're going to be cautious. You're going to you're going to let the dust settle over the next sort of 2 or 3 weeks, 3 or 4 weeks, 5 or 6 weeks, just to see what plays out with the property market and if things do drop. Places like Wellington and Kapiti aren't necessarily reliant on big tourism numbers. There's a lot of government. There's obviously a lot of construction around. So I would guesstimate that there's a lot of industry and jobs around Wellington that are still fairly safe because they're government jobs or, non-tourism. A lot of, things like IT jobs could be affected. But I think it's just looking at your situation and thinking, are our jobs secure? If they are a little bit sketchy, then now's probably not a time to be committing to a real estate purchase.
Yeah, fair enough. Lastly, Craig, KiwiSaver. We saw a drop almost overnight, people losing thousands of dollars, but it seems to be coming back up. Should we still be confident in KiwiSaver?
Yeah, totally. And again, in terms of this is very general advice and not specific.
Of course.
But look, KiwiSaver is a long-term investment, and in theory, when the share market drops, and again, just talking really loosely, when the share market drops, stocks are cheaper, so the fund managers buy quality shares at a cheaper price. So it's a long-term investment. So I wouldn't be too spooked by what's happening in terms of KiwiSaver. Still be paying money into it. You're still getting the tax credits. Your employer's still paying money into it. So it's a good long-term investment. The things for people to be wary of is those that are looking to, purchase a house. The banks are getting people to check in on their KiwiSaver, and at the last minute having to provide new proof that their balances haven't dropped. But like you say, it's looking like things are stabilising. And obviously people that are nearing retirement over the next, 5 years or so, or even shorter time period, might be just, watching and getting appropriate advice on when to, if they're not in a conservative fund, when might be a good time to shift their funds to it. So, but for most people, it's a long-term investment, so don't get spooked by it. But people who are getting closer to retirement, and those who are looking to use their KiwiSaver for a house, they just do need to be a little bit more careful and keep an eye on things a bit closer.
That's the one. Well, it is a marathon, not a sprint. So I'd love to have you back on in a few weeks to see how level 3 and level 4 looks like for you and the industry. Thank you for your time today, Craig Pope.
No problem, mate. Happy to help.